Welcome back to the deep dive. Today we're digging into a fresh batch of source material, specifically some key excerpts from a market and economic briefing, dated today, Thursday, June 5, 2025.
That's right. And this briefing pulls from, well, quite a range of sources. Reports citing outlets like CNBC, Wall Street Journal, Reuters, Bloomberg, New York Times, Department of Labor, but also some more specialized ones like The Information and The Verge, and others mentioned in the document.
Yeah, a real mix. So our goal here, like always with these deep dives, is to really cut through the noise, pull out the most important stuff from this material for you.
Basically help you get informed quickly about what's really moving the needle in the markets and the economy, well, right now, as of today, June 5th.
Exactly, because looking at these sources, there's quite a lot going on. Lots of interconnected threads.
Oh, definitely. You've got big corporate shifts, some really fascinating tech and AI developments, key economic signals flashing, and you can really see the impact of global dynamics playing out. It all shapes the landscape you're navigating.
Okay, so let's jump right in and unpack this briefing. Maybe start with a quick look back at yesterday's market action. The sources here give us the numbers.
Sounds good.
So the Dow Jones Industrial Average, it took a little step back, fell 92 points. Actually ended a 4-day winning streak there.
Okay.
Meanwhile, the S&P 500, it was, well, basically flat. Not much movement either way by the close.
Right. Kind of holding pattern there.
But the Nasdaq Composite kept climbing, managed a 0.32% gain. And Treasury yields, they're holding pretty steady this morning after falling quite sharply yesterday.
Okay, so a bit of a mixed bag from yesterday's close across the main indices.
Yeah. Exactly. So moving from that broad market view, the briefing really highlights some specific company moves, especially in, tech and AI. Some companies are pushing ahead, but others are facing, well, some real challenges.
Absolutely. Amazon is a big one mentioned. They've apparently launched a new team focused specifically on what's called agentic AI within their robotics division.
Agentic AI.
Yeah.
That sounds like more than just making robots smarter.
Right. It is. It implies systems that can understand higher level goals, and then figure out the complex steps needed to achieve them on their own, autonomously.
Okay, so how are they looking to use this?
Well, the briefing mentions reports that this team is developing humanoid robots, possibly for parcel delivery, and they're already testing how these might integrate with Rivian's electric vans.
Wow. Humanoid robots getting packages out of Rivian vans. That's quite the image.
It definitely paints a picture of AI moving into much more complex physical tasks, like automating that tricky last mile of delivery.
Makes sense. But, while some are pushing the tech forward, others are dealing with the downsides. Google's got a cybersecurity issue reported in the briefing.
Yeah, and this one sounds pretty concerning. Hackers apparently breached at least 20 firms in the U.S. and Europe.
How did they get in?
Not just brute force, it was sophisticated social engineering. They actually impersonated IT staff to get that initial foothold, then specifically targeted Salesforce systems, stole data, and demanded ransoms.
Oof. So it really highlights that human element still being a major weak point.
Exactly, even with big corporate platforms.
And, speaking of security and AI misuse, OpenAI has been active too, according to the briefing.
Right. They reported disrupting 10 covert influence operations that were using their AI models.
10 operations using things like ChatGPT.
Yeah. And the report notes that 4 of these are thought to be linked to China, using the AI not just for text, but for propaganda, maybe some surveillance analysis, even drafting internal documents for malicious stuff.
It's a stark reminder, isn't it? AI is powerful, but it can be used for less savory purposes by state actors, too.
It's that classic dual-use technology problem. It's notable that OpenAI is taking these proactive steps, though. Shows the industry is really grappling with these real-world risks.
Yeah, good point. Okay, so beyond the cutting-edge AI stuff and the security side, the briefing also points to some big strategic shifts at established companies, often involving job cuts, unfortunately.
Yes, and these seem directly tied to that weaker economic outlook and the market conditions mentioned elsewhere in the briefing. Take Citigroup, for instance.
What are they doing?
They're planning pretty significant layoffs in China, looking to cut 3,500 tech jobs there by Q4 of 2025.
3,500 just in China. Is that part of something bigger?
It is. It's part of that global plan they announced before to cut about 20,000 jobs overall. The sources specifically mention the weak economic outlook in China and, interestingly, rising regulatory pressure from Beijing as key drivers for these specific cuts.
So macro conditions and geopolitics forcing some tough local decisions there.
Precisely. And it's not just in finance. Procter Gamble, the consumer goods giant, is also planning a big restructuring.
P&G, what's their plan?
They're aiming to cut 15% of their non-manufacturing roles over 2 years. That's roughly 7,000 jobs.
Yeah.
So pretty substantial cuts outside of their actual production lines.
And is it just jobs, or is there more to it?
It seems linked to trimming their product portfolio, too. The reasons given in the briefing: weak sales in some areas and a lowered forecast for the current fiscal year.
Okay, so they're kind of consolidating, right? Focusing on efficiency and profitability because sales are maybe a bit tougher.
That seems to be the picture, yeah. And then you have Kimberly-Clark, another big name in consumer products. Kleenex, Huggies, etc. They're making a different kind of big move.
Oh, yeah. What's happening there?
They're reportedly close to selling off their international tissue business. And that includes the Kleenex brand internationally.
Selling Kleenex internationally. Wow. Who's buying?
A Brazilian conglomerate called Suzano. The deal's apparently around $3.5 billion.
So why sell such a well-known brand?
The logic, according to the briefing, is to pivot. Focus on higher profit parts of their business. They're keeping the North American tissue business, so maybe the economics are better there.
Interesting. How's the market taking it?
Pretty well, it seems. The briefing notes KMB shares are up 5% year-to-date. Suggests investors kind of like this idea of focusing on the more lucrative segments.
Makes sense. So different strategies for navigating these pressures cuts versus selling off assets. Okay, let's shift to how geopolitics is hitting consumer businesses directly. E-commerce, specifically.
Right. This briefing flags a really dramatic shift for those popular Chinese shopping apps in the U.S., Temu and Shein.
Dramatic how?
We're talking a huge drop in U.S. daily active users just in May. For Temu, the sources say it was down 52%.
52%.
In 1 month.
Yeah. And Shein was down 25%. That's a massive decline very quickly.
Wow. What's driving that kind of sudden change?
The briefing points directly to those recent U.S. tariff hikes and also the closing of a specific trade loophole these companies were apparently using quite a bit.
Ah, okay. So policy changes having an immediate impact. Exactly. And in response, the report says both companies are now shifting focus more towards other international markets, ones that are maybe less regulated right now. It's a really clear example of trade policy hitting business models and consumer access.
Definitely. Now, speaking of tech and conflicts, there's a legal battle mentioned, Reddit.
Yes, Reddit is suing Anthropic. That's the AI company behind the Claude models.
Suing them. Why?
Reddit alleges that Anthropic's AI bots scraped Reddit, accessed their platform over 100,000 times since last July, even though Reddit had apparently banned that kind of access.
Okay, and what's the harm they're claiming?
They're arguing Anthropic potentially misused all that user-generated content, which Reddit values, in the billions. This lawsuit really gets to the heart of that growing tension, doesn't it, between AI needing data and platforms wanting to control their content.
Yeah, could be a really important case for AI data sourcing and IP rights going forward.
Absolutely.
Okay, let's shift gears slightly to capital markets, IPOs, listings. The briefing confirms a big IPO happening today, June 5th.
Correct. Circle Internet Group, they're the ones behind the USDC stablecoin. They are set to go public today.
Anything unusual about this IPO?
Well, what's interesting is the structure. Apparently, 60% of the shares being sold are from existing investors, not the company raising new capital.
60% from existing investors?
Yeah.
That rings a bell. Wasn't Facebook's IPO structure kind of like that back in 2012?
It was, yeah. And the briefing sort of hints that this might reflect the current environment for venture capital firms. Maybe a bit of a liquidity crunch, VCs looking for ways to cash out some of those long-held stakes.
Makes sense. How's the pricing look?
Strong, actually. Circle priced at $31 a share, which was above the expected $27-28 range. So even with that structure in the VC situation, there seems to be good investor demand.
Interesting signal about private market liquidity versus public market appetite, though.
Definitely. And it's not just IPOs. We're also seeing companies think about where they're listed.
Like who?
Wise, the UK money transfer company. They've decided to shift their main stock listing over to the U.S. They'll keep a secondary listing in London, but the primary one will be here.
Why would they do that? Access to more capital? Different investors?
Probably all of the above. Seeking deeper capital pools, maybe hoping for higher valuations, or just getting in front of U.S. investors who perhaps understand their fintech model better.
And how did the market react to that news?
Very positively. Briefing says Wise shares jumped 11% on the announcement, suggests investors think the U.S. listing will unlock more value.
Right. Another data point in that whole debate about London versus New York as financial centers.
Exactly.
Okay, that covers a lot of the corporate and market-specific news. Let's pivot now to the broader economy. The briefing has some key indicators out yesterday and today.
Right. And one big one was the services PMI, that Purchasing Managers Index for May. It came in at 49.9.
49.9. Okay, anything below 50 is contraction, right?
That's the rule of thumb, yeah. Below 50 indicates the services sector, which is, a huge chunk of the U.S. economy, is actually shrinking slightly, not growing.
And that was below forecast.
It was. Forecast was around 52.0. And this is the first time in nearly a year that the services index has dipped below that 50 mark.
So what's causing this dip? What did the sources say?
They point fingers at tariff-driven supply bottlenecks. These aren't just slowing things down, they're also pushing up costs. The briefing notes input prices hit a 2.5-year high in May.
So there's that direct link again. Trade tensions impacting supply chains, leading to higher prices, and now potentially slowing down the services sector.
It's a clear ripple effect, yeah.
Okay, what about the labor market? We got the weekly jobless claims too.
We did. For the week ending May 31st, initial jobless claims, seasonally adjusted, came in at 247,000.
How does that compare to the week before?
It's up slightly, up 8,000 week over week. And the 4-week moving average, which smooths things out a bit.
Yeah, gives a better trend indication.
Right. That also ticked up by 4,500 to 235,000. Now, historically, these numbers are still pretty low, but that slight upward creep in both the weekly and the average might suggest the labor market is maybe cooling off a bit, or at least plateauing after being incredibly tight for so long.
Something to watch. Now, speaking of data, there was a concerning note in the briefing about data reliability.
Yeah, this is important, maybe flew under the radar a bit. The Bureau of Labor Statistics, the BLS, they're apparently scaling back how much consumer price data they collect.
Scaling back. Why?
Budget constraints, according to the sources.
Oh.
And the concern is, well, if you collect less data, how reliable is your inflation reading going forward? It could create blind spots, make it harder to get an accurate picture of price changes.
Which is critical for the Fed when they're making interest rate decisions.
Absolutely critical. So potentially a bigger issue down the line.
Okay. And on interest rates, we saw a big move from the European Central Bank, the ECB.
We did. Widely expected, but they went ahead and cut their key interest rates by 25 basis points. Their main rate is now down to 2%.
So the ECB cuts while the Fed here is holding steady. What was their reasoning?
Basically, trying to support sluggish growth in the Eurozone, they specifically mentioned geopolitical tensions and the impact of U.S. tariffs as factors holding back their economy.
Interesting. So you're seeing central banks potentially taking different paths now based on their own regional conditions and pressures.
Exactly. Divergent monetary policy could be a theme.
And looking ahead, still more data coming.
Yep. Today, 8:30 a.m., we got balance of trade, exports, imports, and those jobless claims we mentioned. But the big one everyone's waiting for is tomorrow, Friday.
Non-farm payrolls.
That's the one. Non-farm payrolls for May and the unemployment rate. That'll be the next major signal on the job market's health.
Right. Okay, before we wrap this deep dive, the briefing also touched on some recent earnings reports and IPOs again. Maybe just quickly connect those to the bigger picture.
Yeah, definitely. So you look at earnings from companies like P&G, where weak sales were mentioned, or the Toro company, which saw revenue drop and miss estimates. Those reports kind of underscore the challenges we're seeing in some consumer and industrial areas, right? Fits with the idea of slower growth, maybe more cautious spending.
Makes sense. But it wasn't all negative.
No, not at all. You had companies like MongoDB and Ciena, more on the tech infrastructure side, showing really strong revenue growth, beating estimates. So that suggests there's still underlying demand in areas like data management, networking, even while other parts of tech deal with, security issues or those big strategy shifts.
So mixed bag under the surface.
Very much so. And the IPO activity circled today, Omada Health potentially tomorrow.
Right.
That tells us about the capital markets, right? How companies are trying to get funding, what kinds of businesses investors are currently interested in fintech, health tech, and also reflects those VC dynamics looking for exits. It's all part of that capital flow picture.
Okay, so let's try and pull this all together. When you step back and look at everything in this June 5th briefing, the job cuts, the strategy changes at big companies, the AI developments and risks, the trade impacts hitting apps and the economy, the signals from services and labor, the central bank moves, the capital market activity. What's the overarching theme?
Well, I think it paints a picture of a really dynamic, maybe even somewhat unsettled period. You've got companies making pretty aggressive adjustments, cutting jobs, selling off big brands, reacting to economic headwinds and sometimes regulatory pressures.
Right.
At the same time, you have technology like AI just racing ahead, creating huge opportunities, but also, as we saw, significant security headaches and these new legal fights over data.
And these aren't separate tracks, are they?
Not at all. They're intertwined with global factors. Tariffs aren't just headlines. They're hitting apps like Temu and Shein directly. They're showing up as supply bottlenecks and higher input prices in the PMI data, possibly tipping a key sector into contraction.
And all this is happening while central banks like the ECB are starting to diverge from the Fed, adding another layer of complexity.
Yeah.
And the capital markets are reflecting all this uncertainty and shifting priorities through IPO structures and listing changes.
Yeah, what's really striking is how connected it all is. A decision by Citi in China is influenced by the local economy and regulations. That economic outlook is shaped by global trade friction. Technology fuels new business models, but also creates vulnerabilities like the Google breach and legal issues like Reddit versus Anthropic, and it even gets used in those influence ops OpenAI is fighting.
It really hammers home that none of these news items from today's briefing exist in a vacuum. They're all pieces of this much larger economic and business puzzle, actively influencing each other right now, today, June 5th, 2025.
Which really leads to the core question for you, the listener processing all this. When you think about these powerful forces converging, you've got rapid AI progress, both exciting and risky. You have corporations tightening belts and making big strategic pivots. You see geopolitical tensions directly warping trade and economic data, and central banks are starting to make different moves. How do you see these factors combining to shape the investment landscape and the economic path ahead from where we stand right now?
That really is the crucial question to chew on. We've taken our deep dive into this specific briefing today to pull out these key threads for you. Thanks for joining us for this deep dive.